Hey, good afternoon, ladies and gentlemen. Welcome back. Hope you're all doing well. If you give me a quick sound check, that would be great. Then we can get cracking on. All good. Nice and speedy. Thank you, James. Thank you, Nadia. All good. All right, team. So good to see you. Good to be back in the hot seat after a pretty good weekend. Yeah. How was the weekend for you guys? Hope it was all good. Hey, good afternoon, Braden. Good to see you, mate. Nice and relaxing. Good, good, good. I wouldn't say mine was exactly relaxing with the kids involved, but no, it was good. It was a really nice weekend regardless. And I think I'm probably just about as excited as my youngest to get him his first fully fledged downhill bike. So yeah, I'm buzzing about that. Can't wait to go shredding in gonna go shred in Wales. Already got it booked in. Gonna go to the big bike park in the Welsh mountains and go do some downhill with my 7-year-old, which is gonna be brilliant. I'm planning by the time he's my age, he's gonna be a professional. Definitely, I'm gonna push it. So yeah, that's pretty much what I did. We went for a couple of bike rides in the wet weather. Yeah, he's a chip off the old block, my little one. He really is. He is a chip off the old block. That's not bad. That's not bad. I do love my extreme sports, but yeah, I guess mother mother's a bit worried. But to be honest with you, actually, his mum's been very supportive of it. She really sees the benefits in it, and we don't. I don't know, call us old fashioned or whatever, but we don't like too much technology around the kids. So yeah, we try and keep screen time down to a minimum, and we do a lot of things outdoors and active stuff, and getting out as much as we can. Obviously, England's not the greatest because of the bloody weather, but yeah, we try and do a lot of that stuff. But anyway, let's get going then. So last week, obviously, election week, lots of things going on. We had the FOMC as well. FOMC event was a complete washout. Just to give you guys a little bit of a recap, election day itself was quite interesting, volatile, markets moving. But apart from that, we didn't really see too much else. It was actually, at the end of it, it was actually quite a slow week. I think after the losses that were incurred on Friday, I believe the week ended up about 0.5% or something, maybe a little bit, like maybe 0.75% or something. So very, very slow week. Now, obviously, still happy to be up on the week, but it was incredibly slow. And I guess I was a bit surprised. I mean, the stock markets, a beast upon themselves with the election. They did rally, and we saw all new time highs and stuff on all three of the major US markets. We saw the Russell 3000 index was a wall of green when we reviewed that as well. So definitely things going on. Equities definitely benefited equities. I know we haven't done too much equities work. I have made the focus so far more about your sort of OTC CFD markets. We haven't really broached the equity side of things. That's to come. Definitely going to be doing some closer work with equities with you guys. I would say vast majority of my trading is actually in the equity space, really. So it needs to sort of unfold in here as well, I think, if everyone's interested and there's enough of a want for it. I find equities really good for new traders if you building a sort of additional rev streams. That's the kind of thing that I would start off looking at, just building up yourselves little kind of side, think about it as a side hustle. You know, if you got a spare 50 quid a month, something like that, you can start real small. Nowadays, because of the apps and how much we've had an explosion of accessibility into the markets, you guys are able to buy fractional shares of basically any AAA stock that you want, right? Any mega cap stock. So Tesla, which has now got a $3 trillion valuation, and all the other big ones, you know, your Microsoft, your Apples, and stuff like that. You can all now buy fractional shares. So why not? You know, it's become so accessible to everyone. You know, it's a good thing to have a little bit of experience and exposure to, because it all kind of fuels the same end goal, right? Yes, we are intraday trading, we are day trading a lot. We've got stuff going on inside the fund every single week. You're getting absolutely slammed, I would say, with various trade ideas and stuff that you can, you know, take actionable trades from. And then it would just be really good to have a little bit of an equities basket starting to build up as well. Ian, I'm not to put you on the spot, but do you have any kind of, I don't know, a guy of your background, you might have a bit of exposure to equities markets or anything like that at all, maybe? Possibly. I don't know. I might be incorrect about that. You don't have to answer. You can tell me to beat it if you want, but I just thought you might. I thought you might have, possibly. I'd like you to do a stock pick like you used to do it. Forex signals, what to look for, dividends. Yeah, that sounds good. Yeah, that sounds like a really good plan. Yeah, I'll put something together. I'll put an idea together. Yeah, nice. Yeah, nice one, Ian. Yeah, I thought you would, mate. I know we didn't exactly speak about that in particular in private, but I did get the kind of vibe that you would have a basket together. So that's really good to hear. Maybe you could provide some input in places when we do that, and yeah, we'll take it from there. I'm sure there would be a lot of people that would enjoy hearing about it and benefiting from it. Maybe I will put you on the spot and I'll ask you to do a stream with me at some point. We'll have a talk about things. See what you're doing. Hey, don't worry, mate. I won't put you on the spot too much. You can hit me up if you're up for that. But I would like to get some community members on. Nadia, I know you are still definitely on my list, and I haven't forgotten about what I want to put together with you either. So don't count yourself out of that one. It's still on the agenda. But yeah, we'll get it done. We'll get it done. Awesome, cool. All right, guys. So let's start off then. Start off from the top. Look at the fundies. What's going on this week? What drivers we have? So Monday today, 11:30 this evening, we've got the Westpac out for the Australian dollar. That's at 11:30 p.m. GMT. We are not expecting too much of a huge market impact from this one. It's a good one to always keep in our minds and review for Australia. But at the end of the day, you won't be looking to actively trade it. So in terms of active trading news events, we've got United Kingdom's unemployment rate at 7 a.m. and that's as good as it gets. The ZEW is not worth trading. It's an important one, but it's not worth trading. So then we're instantly down to Wednesday. This week, ladies and gentlemen, we've got the big one for the US, inflation rates. We've got the monthly and annual core and the monthly and annual base inflation rates. They're all coming out. So far, we have a bit of a sort of stable, I would say, print for the forecasts. The only one we're looking for a rise in at the moment is actually the annual inflation rate, which is 2.6 up from 2.4. This is, out of them all, the most important one and the one that will be up on the top of the priority list for the Fed. So to see that we are actually looking at a 0.2% increase in inflation on this one does mean that if everything comes out as expected and this one comes out a little bit above, then we will probably see a pretty sharp decline, intraday decline in our US stock markets, and we may well see that DXY continue its rally. And when I say continue its rally, I really do mean that. The DXY currently trading up at 105.64 and is still looking like it's got a ways to go. We've also had a very broad spectrum descending level that the DXY has been adhering to. It's not perfect, but it is there. And if we actually bring this right the way over, we have broken through. Now, we've had a breakthrough before. We had this tiny little breakthrough here, just very temporary. And that was in May of this year before coming back down and forming the base of the M reversal. But this one does feel different. We've got a break, close, and a retest of liquidity here. We had a really nice pennant. Don't know if you guys can see that very clearly. Let me just stretch out the chart. So we break up in this area here. We come down. We've got the pennant there. And then we get the big bullish breakout of that pennant, which is what we can see there as well. So it does look at this stage like the US dollar will continue trading higher. And my bullish, I've just given it away. My bias is definitely bullish and will continue to be bullish now for a while, based on the political situation of the United States. So we'll have to wait and see what Wednesday says about the inflation. Of course, inflation being stable all around is not actually necessarily that good when they're trying to reach their 2% inflationary target. 3.3 still well above, 2.6 still well above, 2.4 is kind of getting there, definitely. You know, a sort of drop of 0.4% is going to get them where they want to be. But if we're looking at a rise now in inflation back from 2.4 to 2.6, it's not going to be good for the Fed, and it's not going to be good considering we've just seen we just saw the Fed reduce interest rates by another 0.25%. So then we're going to have to take into consideration the market sentiment. Where is the investor confidence going to be? Whether it's going to be, are the Fed cutting rates too quickly? Should they have left the rates the same this time around? Are we going to see a bit of a delayed effect, a ripple effect here of maybe the inflation rate coming down in Q1 because of what we're doing right now? It's always kind of trailing behind, so we do tend to see that. But if we're seeing this rise, obviously, guys, this is speculation right now, of course, because we're looking at forecasted figures. But if we do see that rise, then that means, the interest rates being reduced maybe a little bit too soon, which is then going to bleed out into the market sentiment. You may see stocks sell off. You might actually, to be honest with you might actually see the bloody dollar shake up a bit first before continuing its push to the upside, simply because of a lack of investor confidence. Maybe we'll see an asset like gold begin to rally again. Gold at the moment is trading here. It's down at the moment, had quite a big sell-off. Obviously, the dollar rallying, the political situation yet again is really driving force, the driving force behind this sell-off at the moment. Gold trading back down to maybe 26.05. Maybe we bottom out here by the Wednesday. Maybe the inflation rate comes out. We get the bounce in gold back up to 26.80. Hold me to it. Call me out. Let's see if the call's right. That's what I think definitely one outcome could be, based on this Wednesday's information. So anyway, moving on to Thursday, then we have the PPI as well, which is pretty good. So that's at 1:30. So that'd be a nice one for us. At 8 o'clock GMT, we actually have Fed Chair Powell's speech. That's going to be interesting to see what he's got to say, especially following the inflationary figures as well. I wonder if there'll be any kind of last minute changes there or not. But again, it won't. But I'm not going to be streaming it live at 8 o'clock at night here. But I am going to be watching it, so might be worth you guys having a read as well, or a watch it either way. And then on Friday, we tie up the week with a round of GDP data for the UK, and that's at 7 a.m., followed up by retail sales for the United States. And frankly, retail sales isn't worth a dime anymore in terms of actual trading content. It used to be one of the big market movers, and nowadays, it's just not really doing anything to the markets whatsoever. So it's going to be a sleepy Friday. That's what I think. It's going to be a pretty sleepy Friday. So the big days of the week, Wednesday, Thursday, this week. Tuesday does have a couple of drivers, but they're all over and done with before the European session really even gets going, apart from the ZEW, but that won't do anything to the DAX anyway. So we've got a couple of days to really kind of set ourselves up, and we don't need to be sort of rushing around for anything. So let's have a look at the screeners then, to get us off so far. We've got the Japanese yen, NZD, Australian dollar, CAD, and pound Japanese yen selling off quite nicely at the moment. It's looking quite weak. Moving into the kind of neutral territory, we have the pound itself, pound against the Oz, NZD, CAD, and Swiss there as well, to be fair. So pound's looking quite nominal, quite stabilized right now. As we go into the greens, we're looking at relatively stronger currencies here. We've got the Swiss, the Australian dollar. We've got the US dollar, definitely, which is leading the way at the moment. I mean, USD yen down here is looking, it's in the top spot. We've got a bunch of others as well. So if we just go up here, basically everything against the yen. The yen's looking incredibly weak, but the US dollar is looking pretty good as well. USD Swiss, USD yen, USD CAD, even though the CAD's not actually doing too badly. Yeah, what is that USD CAD up at the moment? 0.3%, so yeah, it's not too bad. So that's where our money needs to be, I would say. Australian dollar and New Zealand dollar are doing really well, but I guess that's against the Japanese yen, isn't it? So it's a bit of a skewed print. Hey, great, thanks a lot, TradingView. So I can't look at my stock breakdown right now. That's fine. Yeah, we'll have to see where that one goes next. So, start from the top of the list then, work our way through. I think, because it's a Monday, what I'm going to do is I'm going to look more at the daily time frames, I would say, first, and just to build some trading margins. So, for example, on corn, we've got liquidity here, which is quite decent. We had a fake out of that one at the point of reaching it, but then we had this big price action pullback. So that's quite nice. I think this is going to be a really nice area for a retest. Price action is looking like it's coming down already. We've got this area in here, which is where the price line is right now. And if we go back and follow the price line, this is actually a really nice little point of liquidity in here. So I think if we can sort of drag that one back in time, this then becomes a relatively good trading margin. I mean, if we're getting going above that one, well, we'll find out tomorrow, won't we? It's not going to happen today. But this area is not too bad. So nice little intraday trade. Corn, if you're interested, break a structure point there. Short target down at 441. Stop loss probably going to be up at around 443. And that's only upon the breaker structure. So that can be set via a pending order. So entry is going to be about there. And then you've got your target. Wait, what's going on here? Why is this snap locking? I feel like I've done something. No. That's all right. Yeah. So yeah, probably about there. For a 1 to 2.43, which is quite nice. So short, natural gas. Yo, yeah, guys, the gap up on natural gas. Have you seen natural gas print? Look at the change difference in that. 11.53% gain. Absolutely monumental gain in the natural gas market. Huge demand increase. I mean, we closed off on Friday at 230. This morning we're trading at 260 and we're currently printing 257. Absolutely mind-blowing move. Completely scrubbed the trade idea as well, obviously, from last week, which is a right shame. But look at the daily chart. I mean, it's really good. The ETFs that I was buying into at the beginning of the year, the natural gas ETFs, they are actually doing quite well now. So, yeah, all going quite well there with NG at this stage. In terms of trading opportunities, though, I mean, a gap of this size, it does tend to give me slightly cold feet. So I think what I would rather do is let the day pass. Let's see where natural gas ends up tomorrow. Because if the gap's going to be filled, there's no point even considering longs at this stage. And we'll be waiting for it to come back down to around 247 to then short to 241.8. Yeah. So basically the trade idea that we did last week on a reversal. So we'll wait to see what that one delivers tomorrow. Looking at UK Brent at the moment. This was last week's one here. So this was a trade idea that never triggered. They got cleared. So don't don't think, oh yeah, look, trade ideas on the board already. No, that's not the case. Unfortunately, it's going very, very well. Don't get me wrong, but obviously not a trade idea that we've actually looked at taking. So what we're going to be doing now is we're going to be recycling last week's zones. There's no reason not to. The first series of them are the best ones to go for. So we can basically delete everything that's upwards of, sort of 74, I would say. So just get rid of all this and clear up these charts a little bit. There we go. So that's what we're looking at right now. Market to come all the way back down to 71.50. In an ideal world, we're going to be looking at the break into liquidity here. Now, I actually deleted a path from this that I was expecting before, which played out perfectly. So again, what I'm doing is waiting for the push into liquidity, which is basically anywhere underneath the 71.20 area, and then looking for the reversal back up to that breaker structure point. And then we will essentially be looking at the long taking place from there, target profit, and of course our lovely stop loss, which is going to be about there. That's a 1 to 2.2. Not too bad at all, that one. Not too bad at all. Now, we cannot base this on a pending order. It must be following the reversal of this area. So, as we have done many times over, we come down, we place an alert. We place an alert at liquidity down here. And then once the alarm goes, we then place the pending order in and get that ready to travel to the upside. So that one is long following the retest of this stage. UK Brent, US crude, sorry, not interested at this stage. Gold. Now, we've already done the daily work on gold as well, which is great. Gold at the moment coming down. My view, as was discussed a moment ago, is for the run to continue all the way down to around 26. And then for Wednesday's CPI, should it come out... I mean, this is all very fundamental specifics, right? So if we get a print that is beating the expectations, then... frankly, gold's probably going to be dropping down to 25.50. If it misses the expectations, then gold is probably going to be going upwards of 26.80. So it is very much glued to the CPI. But that all being said, this is a very significant level of daily liquidity in here. That goes without saying. So I think if we can get ourselves down to around this area here, we could look at a relatively large position from there all the way back up to here. And so you'd be looking at, I'd say, the best part of a 1 to 3. And that one, again, it's short right now. So please, when I'm tagging this green, it's short right now. But this is the trade idea that I want to be taking from it in a couple of days' time, if that's how long it takes. Okay, Aussie CAD. Daily time frame. Let's go. So, daily time frame. We've got the breakdown, high and low. In an ideal world, we are going to be looking at the rejection from this area and then putting the position back down at 87. Very difficult to right now judge where the money is in the Aussie CAD, whether we should be long or short. There's a lot of consolidation that's going on and around this area at the moment. This is a daily chart, of course, so there's absolutely many opportunities that we could be potentially looking for here from an intraday perspective, but there's nothing that's standing out crystal clear on the daily at this stage. So I think, I mean, if we're absolutely desperate for some Aussie CAD trading, you've got the low here and you have the high here. Those are the trading margins for this one at the moment. Based on a 15-minute chart, this is what they look like. So intraday trading between 91.85 and 91.53. But honestly, guys, I probably wouldn't quite trade it yet. The trading opportunity is from the breaker structure point, and that's going to be situated about there. And so therefore, you have to wait for the market to dip back down into this area, capture the liquidity in and around this area, and then get the push back up to around that 91.85 area. And that's going to be the entry, the target, and the stop loss basically where it's situated automatically. And that's going to yield you around 2.6, 1 to 2.7. So that's not too bad at all. But again, this cannot be a pending order. Unfortunately, we're on a Monday. A lot of these things are not pending order positions as of yet. They will be, but they can't be yet. So there's going to be some work to do with the, as I so aptly put earlier, alerts. The alarms and alerts. So that's a long Aussie yen. All right, let's go back to the daily. Daily time frame at the moment. Beautiful range. Fake out last week. The range continues for me. I don't see any reason to believe that anything else is going to continue. And you guys are going to be happy with this one. And I think you know why you're going to be happy with this one. You're going to be happy with this one because this one is an opportunity that we can plug straight away. No hesitation at all. We've got a beautiful breaker structure point. In fact, I'll probably just have that down just a cinch. So that's going to be too low. No, that is definitely where it is. Let's just go back and confirm. If in doubt, always look left. I'll tell you what, I probably would actually have that a much lower. So I think I prefer... Yeah, I think I prefer that, actually. That's quite a bit lower. Yeah. But a lot of price action seems to be swaying between these two margins with the occasional outlier of hitting these bigger points of liquidity above. Would you agree? What do you guys think? And remember, you know, what I say isn't automatically exactly what we should be looking for here. You know, I'm a humble human being. So, and to be honest with you, this is not absolutely clear cut. So, what do you guys think about this? You'd have it at the higher one, Braden. What the one that I originally had, Braden, which is, you know, like this one, for example. Okay. Yeah, I know what you're saying. I mean, I get it for both sides of the arguments here. I just feel like if we pushed through this one, we would run the risk of then bouncing into this. I don't know exactly. Let's face it, right? If we have a trade, so let's run a dummy trade. If I had a trade that was on a breaker structure of this level, then the trade idea would look something like this, I should imagine. What's the risk reward on that? I wonder 3.7. Okay, no, it would not be that. So that's fine. If I would have the stop loss to a 1 to 2.8. Still a fantastic risk yield. Now, upon the moves that we've had into liquidity and we've bounced back from this area, we've come very close to stop loss. What's that one? That one is stopped out, actually. That one is a full-on stop out. So, but a lot of these moves that have bounced back from the lower level, we have got inside the stop loss. Even that one there actually is inside the stop loss, yeah. No, I guess that's okay, isn't it? I guess that's pretty good, yeah, in terms of probabilities. We've still got the odds in our favour. Yeah, we've still got the odds in our favour. So I think we will then stick... Well, I say we, you know, you guys could do what you got to do. But I think I will be happy to stick with the first one. And I think at a 1 to 2.6... I think is going to be the risk-reward ratio that we're going to go for. So we're going to go for a 1 to 2.6 with the stop loss at 101.13. Because then at 101.13, we also account for this area in here. Right? And that area then accounts for a lot of the other moves that have bounced back over time. It's not foolproof because we've still had some elements where we would have been stopped out. But we now do have a very good line of defense for if price action does bounce back. And we've got 1 and 2, and we're still getting that 1 to 2.65 yield on the position in total here as well. So that makes good sense, both risk from a risk profile perspective and, of course, the technical analysis side of the market there as well. So, yeah. Your daily levels are different to yours. Yeah, all right. Fire them in, mate. Send me a screenshot quickly. Let's check it out. All right, let's check it out. Excuse me. That's odd. I've never seen that before. The image, I think TradingView might be having a few problems today. The image you've sent, it has Aussie Yen chart image by Mighty Fox, but then it's got a broken image panel, so I can't open it up. Try and visit the site direct to see if it works. Hang on. No, still broken. I don't know about you guys if you're struggling from the same thing, trying to open it, but yeah, I think TradingView might be having a bit of a, yeah. I don't think it's your fault, James. I think it's TradingView having a bit of a funny 5 minutes today. That's all good though. Just send me a thing into the Traders Lounge, and I'll check it out after the session. But for me, I like these daily zones. I don't want to be changing them because these are the most current ones that yield the most success. So I could, for example, have them a bit higher. So, for example, like one there and the one down below, a little bit lower. But I like them being squished. It kind of removes that margin for error at this stage. But that's the pending, okay? So pending order, just to recap then, pending order, break of structure, trade idea, entry is going to be at 177.50, target 99.827, stop loss 101.13. This yields a 1 to 2.65. Risk profile is good. Good risk reward, good TA, good path of least resistance, at least until we get down to about this area in here, which means we're covering our position. We've got what, a 1 to 1.35 in the bag before we hit this roadblock, and then we take that all the way back down. So hopefully we'll be looking at that 99.82 area being struck, and we'll grab a win from it. Oh, good man. Let's have a quick look at this then. Okay, so your upper zone is well above where I had mine, and that's based on... Okay, I kind of see where this is going here. So the big zone that you have above, so the zone that you've got in the middle, you've got the zone down below, the zone in the middle, the zone above, the zone in the middle being the widest one. Remember that a liquidity zone is created at the beginning of a price action pullback. The beginning, always the beginning, always. So for example, if I zoom out here, we go to the daily, right? The beginning of the price action pullback is this area in here, right? So that area there is the liquidity zone above these. And this will be representative of a fake out or whatever it may be, whatever random oddity that might be. The next zone above that one is then situated here, which is then confirmed at this point as a point of liquidity. So what we could then be saying to ourselves is, once we get out of here, this area, we have a number of trading opportunities that are viable for us, because we have position number 1 from this point in here to this point here, trading opportunity 2 from there to there, trading opportunity 3 from there to there. And then we can work our whole way up here like this. The whole way up. And that's obviously nothing of like what it will actually turn out like. It will turn into a right mess. We'll probably get stopped out on 50% of them. But in our minds, that's the way it will be. but regardless of that fact, these are the zones that we're working with. So, yeah. Right, so trade idea, Aussie yen, short. Let's carry on. Aussie NZD. Alright, so yeah, again, actually, this is looking really good. I don't think these zones are quite wide enough, so I'm just going to stretch them out a little bit. There we are. But yeah, really nice little formation here on the Aussie NZD. I love these consolidatory markets, to be honest, when they're like this. Not the 15-minute grind, but the nice big daily ranges, the volatile ranges. They're really good fun and so consistent with the way that we trade. So at the moment, unfortunately, we're trading at a rock and a hard place. The price action on the intraday theme is terrible, absolutely terrible. We don't want to be anywhere near any of this. But should the market rally back to 110.80 or run down to 10.99, we're then going to be in the realms of being able to line ourselves up with some pretty decent trades. Now, if we look at the median here, which is basically about there, I would say, it's not going to be perfect with this. But if that's the median, then we've got two different trading opportunities, because now we can be looking at taking the trade from the high down to the median, or taking the trade from the low up to the median. And that would be the way that we're working that one out. So as it stands currently, there is a trading opportunity that we could possibly look at. Not, unfortunately, for the long, because of the most recent price action. But the short, we could take from here. So then the breaker structure point for this is going to be, what are we looking at? Possibly in there. This is not perfect by any stretch, navigating these points, but I think that is pretty good. Yeah, so another pending order. I do have to be aware, though, we're looking at the Aussie CAD, we're looking at the Aussie Yen, and now the Aussie NZD as well. And I also want to do the Euro Oz. Yeah, because that Euro Oz is still looking absolutely superb. What to do? I think if we do the Euro Oz, we're going to have to cut the risk down on all of them. Because then that's going to be 4 times the exposure on Australian dollar. So then we're going to have to whack that risk down from 0.25 to 0.15. But that's doable. I mean, that's what we do, isn't it? So I suppose then, let's carry on. Short, target, stop loss. Looking at a 1 to 2.4 risk reward. Okay, and that's also going to be a short. Now, just a heads up, team, okay? These two are short. This one is long. Okay, so we're going long the Oz in 1. We're going short the Aussie in 2 so far. So if I want to go short in the Euro against the Oz, which means that I'm bullish the Australian dollar, how do you suppose my risk per position will change? Comparatively speaking to if we were short the Oz in all of them. Right on, man. Yeah, right on. So that's exactly what we would do, what Braden has said. So if we end up looking at a short bias in the euro against the Australian dollar, then we have 2 against 2, which means we can increase the sizes because we haven't just got one singular bias. We are actually looking at split bias across the same currency. However, if we decide to go long the euro against the Oz, which honestly, guys, I'm on this now. This is looking very short at this stage, but what are we going to be doing soon enough? We're not going to be taking any trades from here, are we? So we're going to be waiting for the price to break into the liquidity so that we can then buy back with all the funds back up to around 162 or 162.70, sorry, up at the high. So then this, what does this mean? This means we're going to have to continue with the original plan, doesn't it? Right? So then our trade idea then becomes something like this. I don't know exactly what it's going to look like yet, but it will be around about like that. So 1 to 2.5, but we will be selling the Australian dollar yet again. So we are going to it looks like we're going to have to cut down that risk. We've got Aussie yen short, Aussie NZD short, Aussie short against the euro, and we haven't even done Aussie dollar yet. And frankly, guys, I'm going to give that one a miss anyway. I don't want any more Australian dollar because we're properly exposed in it now. So, I mean, to be fair, that doesn't even look short. That actually looks like it's going to go long. What the hell's going on here? Yeah, that definitely looks like it's going to go for a rally. Maybe we could break structure, possibly. The Australian dollar maybe gets slapped by the US again, back down to 63. I've really liked the Australian dollar recently. I don't feel like... Nah, I don't feel like it's going to be short, though, for too much longer. Well, regardless, we'll have to wait and see. I am going to give the Aussie dollar a miss anyway, though, guys, and leave our exposure there. So we've got Aussie CAD, Aussie Yen, Aussie NZD, and Euro Oz. We are leveraged to the hilt with the Australian dollar. I won't be looking for anything more after this now, and just let some of these run and play out. So let's go on to the CAD Swiss then. So CAD Swiss at the moment currently trading back up at liquidity. By the way, folks, this trade isn't actually closed down. So this was a weekend holder, and we are still well underway with it. It's nowhere near the edge of the stop. It's in the red at the moment, as you can all see, but not by much. And yeah, it's just not really doing too much of anything, is it? It's not really having a good time. But I'm not going to be doing any further work on the CAD Swiss until something happens, whether it gets stopped out or not. I actually still like the trade idea as well. So that's something to add to it. I'm still a fan of the trade. And even if we did get stopped out of this one and broke back down, I would still be looking for the exact same thing yet again. So nothing to be done about that one at this moment in time. Let's have a look at the euro against the yen. So this one had a beautiful bit of range back in time. We went for the breakout, didn't we? So yeah, that's going to be the point, isn't it? The breaker structure in there is very, very nice, but we've actually just proved that that is not necessarily the one to go for anymore. So the second one down is going to be at this area, which we have still had a recent breaker structure with, and it failed. It's not hugely confidence inspiring, but that being said, not so long ago, I mean, we're only talking about, the 7th to the 14th of October here, so not that long ago, we did have very good success rate of trading this breaker structure to the downside. We didn't here, but so far we've had 1, 2, 3. We've had 3 wins and 2 losses. That's still favourable odds. It's not great though, is it? We've got a short in the Euro Oz, and then we'll be looking at a long in the Euro Yen. Sorry. Oh, whoops. We've got a long in the Euro Oz, sorry, and a short in the Euro Yen. That's what I meant to say. I'm going to give that one a miss just for now. Let's have a look at the Euro NZD. So lots of volatile range price action. Rejection from lower liquidity. It's currently trading at 178.70. This one could fall a ways, couldn't it? Let's have a look at the daily here. Yeah, this could be going for a big move down. Yeah, really big move down here. So that's the floor. I wouldn't be discounting these lows, so that would need to be in. That would act as a... Yeah, that's really nice, that level. So that would act as the break of structure point. I mean, we are talking entirely on the 15 daily time frame, sorry. So the margin is huge on that move down. Shall we do something a little bit different? Actually look at a 4-hour chart. Because I tell you what, that is looking like a really nice trade idea. And the risk reward could be huge on something like that. Wouldn't necessarily be looking to execute it straight off the 4-hour time frame. But I mean, if we get a good 15-minute entry, stop loss is going to be between the margin there. I wonder 5.7. I mean, that would be okay, wouldn't it? Be a nice way to start things off. I mean, it sounds insane. It's definitely not a trade idea that I would just naturally take straight off the bat. But I think based on the previous price action, it's definitely one that should be under consideration. I certainly wouldn't be making a habit out of this, though. Let's have a look on the 15-minute again. Yeah, I might have that up there, just at the top there. Bit of a better margin. Count for these swing lows and highs that we've seen over the past month or so. Yeah, okay. So I think we'll leave it there as a 1 to 5.2. It does seem a bit crazy. I know. It's definitely not characteristically right for me to do something like that. But that's such a good setup on the daily time frame. It feels a little... It would almost be rude not to. Looking at this daily chart at the moment, really nice structure in here. Very, very strong-bodied candles. Obviously has a lot of selling interest in it at the moment. The euro, I would have a bearish view of. I mean, look at this US dollar, you know. Think about the fundamentals driving the US dollar at the moment. We do have the risk of the CPI on Wednesday to contend with. So possibly we'll need to think about things there and what we could do at that point in time. Maybe the trade doesn't even get triggered before Wednesday. That would be ideal, wouldn't it? Maybe the CPI is what triggers the trade altogether. That would be really ideal. That would be the best case outcome. The worst case outcome is we lose 0.25%. As always. That's always the worst case scenario, which is why it's never really that bad, is it? But I'm going to go for it, guys. Yeah, I'm going to do it. So, pending order, with the possibility of manipulating the order at some point before it triggers. But I'm going to put it in, pending order, entry 178.041, target 175.17, and the stop loss at 178.59 to be exact, for a 1 to 5.21. So now a return of 1.25%. Which would be pretty good. So yeah, that's the Euro NZD. Right, folks, what time are we on? Bloody hell, it's 20 past 2. 20 past 2. Right, we've got to get rocking and rolling. So, NAS 100, US 30 Dow Jones, both trading all-time highs. None of these have had solid price action pullbacks. S&P, NAS 100, US 30 Dow, none of them. They've only been traveling in a single direction, and that is up. However, I am waiting for that move to happen. So, 15-minute time frame here. We are looking at this as the current margin for shorts, and potentially this, oh, we'll see, this, no, is that good enough? Could be looking for that for the long. It's almost like an inverse wedge. So the target profit, do I even bother with that one? Could I just go straight down to here? Yeah, we could well do. It's a pretty big drop. What are we on at the moment? 0.32%. What do we got? Price line down to here is -7.7. That's doable. It's a big move for a Monday. I think I'd probably be more satisfied taking a trade between 21.16 and 21.12-ish. So, 1 minute time frame. The break of structure for said short is going to be in there. So then entry is going to be about there. Target at the base, and then the stop loss is going to be there, and that's going to yield a 1 to 3, which would be absolutely superb for the day. The other side of the market, we're going to look at the long. The long, unfortunately for you folks, is going to have to come into liquidity before becoming a viable long. And then the break of structure point for the long is going to be at this area in here. Which frankly could be a bit wider. Yeah, that'll do. So then we're going to look at the push down into the liquidity, and then the rejection of liquidity and the long. And then the target profit, not actually going to be aiming for this ascending level here, even though it does look like a good area to aim for. But I'm actually going to be aiming for this point, which if we run it along, matches up really nicely with the midpoint of the M reversal. So, boink, straight the way through. So then the target profit is going to be approximately at 21.24. So entry, 21.24 target, and the stop loss, which is going to be about there, for a 1 to 2.66. That's the NAS 100. The space in here is considered the NML. Dow Jones, 15-minute time frame. Absolutely powering up at the moment, this one. We've got short. The designated target is going to be in this area in here. And that is a whopping margin for a Monday. To be honest, I struggle to see this happening, but that is what the market's got for us. So we'll have to go with it. 1 minute time frame. We've got the structural break point. That's arguably going to be, I mean, it's not much to work with, to be fair, but I would say about there for the structural break point. So not perfect, is it? Maybe a little bit lower. Yeah, actually, that's not too bad. Yeah, okay, so that's going to be the structural breakpoint, which is good. I don't mind that because it's reducing the time exposure in the Dow. So I don't actually mind that. That works for me. So that's where it's going to be. And then we're looking at the trade idea being entry for the short there. We're going to have the target profit, which is going to be there. And then the stop loss for this one, which is going to be up there. So you're looking at around a 1 to 2.34 for the short on that. And for the long opportunity is there. It's going to be done and dusted pretty damn quick. And you have to have the market punch a hole into the money down here first. So then the breaker structure point, again, just building these charts up nice and consistent. We're going to be looking at that going to be about there, I would say. Again, not absolutely perfect, but it's the best we've got to work with at the moment. And then the long is going to take place upon there, target profit, and of course our stop loss at about that area for a 1 to 2.2. So these trades on the US 30 Dow Jones today are much more humble than we've got on the NAS 100. But the margins do still work. And that's the important thing to remember here. The trades might not seem as nice, but we still have a nice bit of structure to play with. So NAS 100, US 30 Dow Jones, both done. Right, guys, listen, you've literally got like 3 minutes to go. It's been a long session. We've covered quite a bit. We've got a nice basket of assets to now get up on the board. Hopefully we're going to get some action from those. Hopefully it's going to be a relatively good Monday as well. So you all have exactly what you need to get going. So I'm going to wish you the best of luck. Have a fantastic day out there. I'm going to be actively trading alongside. So if you've got any questions or anything, please reach out and I'll get back to you as soon as I can. And yeah, we'll pick it up all again tomorrow. So have a good one, guys. Take care. Trade safe and I'll see you then. Bye-bye.